So the Calgary real estate market is projected to increase by 3% in 2025. If you would have asked me this 2 to 3 months ago, I would have absolutely agreed with that sentiment. But with all the American and Canadian politics, all the negotiations that are happening, that is just uncertain at the moment. The Calgary real estate market is still seeing a lot of pent-up demand, but we're not seeing the price increases as some of you would have expected. By the way, welcome to my new studio. Let's dive into it. Now, as you can see here, we've hit a flat line. Are we at the bottom of these price increases? Are we going to continue to dip down lower? Well, we've got to dive into that in each individual segment, and I'll show you what those are. Now, my name is Fyfe. Welcome to my YouTube channel. If you want more information, go ahead and book a call. We've got all the links in the description. If you're curious of what your home is worth in today's market, like I said, we don't exactly know where the market's going to head at this time, but this is a very quick and painless auto AI evaluation tool for you to figure that out. So let's continue on here. Now, when we're starting to look at the overall market, this is the total residential update, you can see from last year, sales are down and new listings are up quite dramatically. Sales are down by 12%, new listings are up by 35%. There's a lot more people coming to the market, which obviously indicates that there's going to be an increase in inventory. So if we actually go down here, inventory is up by 70% compared to last year. Now we need to remember that last year was a super hot year, that there was not a lot to choose from, which increased our price at a dramatic rate. Months of supply is still technically a seller's market, but very quickly going up to a buyer's market, more into a balanced condition, giving a lot of buyers in total a lot more options, and sellers have to be a little bit more careful as to what they're actually going to list their properties at. So let's take a minute here, read through this description. If you want to read it on your own, pause the video and skip to the next chapter. Supply levels improve in January. Calgary, Alberta, February 3rd, 2025. Following 3 consecutive years of limited supply choice, inventory levels in January rose to almost 3,700 units. While 70% year-over-year gains is significant, inventory levels remain lower than 4,000 units, which we would typically see in January. Inventories rose across all property types, with some of the largest gains driven by apartment-style condominiums. So when it comes to these total residential breakdowns, we need to make sure that we're looking at all property types, not just one. That's why it's so important to break these things down. Supply levels are expected to improve this year, contributing to more balanced conditions and slower price growth. However, the adjustments in supply is not equal amongst all property types. Compared with sales, we continue to see persistently tight conditions for detached, semi-detached, and row properties, while apartment condominiums show signs of excess supply for higher priced units. Citywide, the months of supply reached 2.5 months in January, an improvement over the 1 month of supply reported last year, but it is still considered low for a winter month. The month of supply ranged from under 2 months for semi-detached properties, 3.5% months for apartment-style units. Rising supply resulted from a boost of new listings compared to sales. New listings rose to almost 2,900 units in January compared to the 1,400 sales. Sales in January were down by 12% compared to last year. However, even with the pullback in sales, levels remain nearly 30% higher than levels typically recorded in January. So, yes, we are noticing some massive slowdowns in this market. We're noticing a lot more things coming to the market, but the demand is still there. And that is an argument that I've heard from multiple different economists and multiple different people in this industry, that there's still a lot of pent-up demand for Calgary real estate. So there is inventory increases, but it will be interesting to see how that unfolds in the spring. So when we look at the total residential price, we're at $583,000. That's up 3% from last year, about $11,000. Now, month over month, we're down $300, which is nothing. And then compared from last month, we're actually down 0.4% over that year-over-year percentage. So we are noticing a slowdown across all property types, okay? We need to remember that there are benchmark attributes included in all benchmark prices. The link is in the description for those of you who are interested in knowing what those attributes are. Now, going back to this graph here, this is actually very fascinating. You can see that the price point hit its peak in June of 2024 and a steady decline ever since. Now, typically in the month of January, you would continue to see a decline, but we actually saw a tick up in sales, which is good to see that we're actually getting some movement. But when you look at the inventory levels, right, it increased basically all the way back to June supply levels, right? So we have the same amount of inventory citywide for all property types as what we saw in June of last year. So we're going to have to see how much sales increase and how much new listings come to the market come the springtime, right? So let's start to break this thing down a little bit more. Now, when we look at this price point here, $583,000 for the month of January, we're actually already at February of last year's price point for our total residential, right? So we shot all the way up to $608,000 and then basically a steady decline for the benchmark price ever since. Now, when we look at the average price, it's the same as last month, and the median price has actually increased quite a bit, right? We're seeing about $20,000 increase from the median price point, okay? Oh, skip that a bit too much. Our days on market is 40 days on the market as well. When you look at last month, 43, and then you look at last year of 34, right? So we're definitely noticing a slower market compared to what we've seen all throughout last year, showing signs that obviously the market is slowing. The months of supply and price change, right? We haven't hit 0%. Now, the interesting thing about this is if you actually look at this graph here, right? The likelihood that we're actually going to see a negative price growth is quite high, right? If you think about this at $605,000, $608,000, right, we got to shoot right back up to that $605,000, $608,000, or we're going to see some year-over-year price declines. And I would actually argue that I don't think the price is going to increase that dramatically over the next few months, and there's a good likelihood that we could see some negatives here in the next 4 months, give or take. So we're going to watch that go down. You can see that in 2023, we actually had a very close call, going down all the way to 1% to 2% year over year, but then a shot right back up to double digits. I don't think we're going to see a shoot up of double digits. I do think that we're going to see some interest rates decreasing as these tariffs are held up. And I do believe that there's going to be a lot of pent-up demand for people coming to this market. So I don't think we're going to see a prolonged period of negative year-over-year price growth, but there is a possibility that we can inch in that for a few months through the summer. So let's start to break this thing down, right? So we look at the city of Calgary total sales. So year to date, there's only been 1 month, January. You can see that we're actually quite a bit lower from last year's level, which we just looked at the previous graph. Compared to 2022, it's dropped quite a bit. But long-term trends, you can see that we're still relatively high compared to years past. Now, this is going to increase as more supply comes to the market, but at the same time, we're still seeing a lot of demand for the Calgary real estate. Okay? Sales by price range, right? We're looking at that 700, 800, 1 million plus. It's all relatively close from what we saw last year. 600,000, 500,000 have seen some increases from last year, which is the yellow, to the red, which is this year. And then a little bit of a slowdown for those lower price points, especially considered to last year, right? 250, about 280, and then about 240, dropping all three down. So we are still seeing quite a bit of movement in that affordable price range area, right? The $500,000 to $600,000 price point, I have actually experienced firsthand. I've had clients lose multiple offers in this affordable price range. So this is, again, where it's important to realize what you're getting into. Yes, the market in total is slowing down, but are all markets in all areas slowing down as well? Well, let's dive into that. New listings, we're actually seeing a massive increase in new listings. 2015 was the last time we actually saw more new listings come to the market than the last 10 years, right? You can see that we've seen a sharp increase. If that continues and that trend continues, we're absolutely going to see pricing slow down just because there's going to be a lot more inventory to the market. I do believe there's a lot of demand, but I also agree that there's going to be a lot of people coming to the market, especially as a lot of these lower interest rate mortgages come up for renewal and investors just want to get out and sell their property, or people see that the property prices have increased so much they don't want to renew at those higher percentages and they're going to go on the market. So this is going to be a very interesting year to watch the data. Now, total inventory again, right? Total amount of homes left over at the end of the month. We haven't seen a January with this much inventory for the last 4 years. The last time we saw that is January 2021, right after the pandemic, right when you start to look at those graphs and see that price point increase, is the last time that we saw that much selection from this market. And we're going to find out where all that inventory is in a second. When you want to break it down at a price point, you can see that the apartment style condos, right, the $300,000 price point is the most amount of inventory. Everything else is relatively close, right? You've got your 400s, 500s, 600s, all around 450. Then you've got your 800s and then your million plus, which includes everything all the way up to like $10 million, right? So there is a lot of inventory in this apartment sector, and I personally believe that this is going to be the sector that drags down that total residential price point the hardest compared to all other property types. Now, we're looking at total sales by price range. Again, talking about that $500,000 to $600,000 price range, the affordable price range. A lot of single family homes are priced between $500,000 and $700,000. That is still very active. So for those of you seeing this report and getting excited about all the extra inventory, we do need to make sure that if you're in that price point, it's still going to be competitive, right? Now we need to break it down into quadrants and look at that from there. Now, when you're looking at total sales, again, kind of touching on this here, you can see that the total sales in January, we saw January 2022 see the most amount, but this year we have not seen as much from last year. I don't know why I brought that up twice. I shouldn't have done that. Months of supply, right? The trend is clearly going up. The trend has gone up for the last 6 months. There is a lot of more inventory to the market. We've looked at a couple graphs, which is showing that steady increase in supply and the steady slowdown of sales. I would imagine we're going to get upwards to a more official balanced market of 3 months of supply, if not even going to 4 months of supply within the next 3 months, especially as the uncertainty stays if the tariffs stick around. I wouldn't be surprised if we see a emergency rate reduction if the tariffs actually do stay and kick in. So keep an eye out for that. Now, let's start to break this down, right? We've got the months of supply and we've got all sorts of different quadrants in the city. And this is where it's super important for you to realize that not all markets are buyers markets. As an example, single family homes in southeast, southwest, northwest, and north are all still sellers markets, around 1.5 months of supply. Semi-detached homes in southeast and east, still very much a seller's market, right? You start to look at the higher end stuff, apartments in southeast, they might see some of the biggest price corrections just because they have 4.5 months of supply. There's a lot to choose from. Semi-detached homes in West Calgary, very expensive, might I add, might see some pretty large price decreases. Townhouses in Northeast might see some pretty big increases. They're starting to inch upwards of 3.5 months of supply. So again, market in total slowing down. But when you start to break it down into individual quadrants, individual property types, it paints a very different picture. Now, if you want to read this on your own, I strongly recommend it. There's a lot of good information written about each individual property type, about what the Calgary Real Estate Market has written about that. So what I would like to say, go ahead and book a call, right? If you want to have more information about the market, you want to just set up a quick 15-minute call, have some questions, go ahead and book that. You want to sit down for a little bit longer of a chat, book in that 30-minute consultation and let's have that conversation about what it is you could do to prepare yourself for the spring market, because there's so much of uncertainty out there that if you are getting into the market, it's very important that we set up these conversations well in advance so that you have an opportunity to plan and prepare so that when you're actually in the market, you can make sound, educated decisions and not get burnt and lose out on opportunities that you like. So let's look at these individual property types. So the overall market was flat, right? We noticed that. But when you start to look at the detached market, they saw a small increase, month over month, $3,300. Not a whole lot for a price point that is $750,000. Look at the semi-detached, they saw a $4,400 decrease, right? Not a whole lot for $673,000, but it's a decrease nonetheless. Townhouses, $444, down by 25, and then the apartment sector down by 1,000. Year over year, all of these properties are up by quite a bit. Now, this is where it gets confusing between the total residential price point, that's actually at a very low percentage of, I think it was like 2.3%, but then you look at all of these individual property types, and you can see we're still up by 7, 8.3, 4.9, and 5.3. So again, total residential, it's nice, it's a news grab of articles that people can run on, but we need to pay attention to these individual property type stats more than the total residential because they give a lot more information. So when you start to break them down individually, you can start to see some interesting things here, right? So the sales, all the sales for all property types are down year over year. Inventory, the actual inventory is up quite a bit, especially with the townhouse market spanning across the entire city, up 128%. Months of supply, everything's up quite a bit, 92% in total. You can see again, townhouses and apartments up dramatically compared to last year, and then the price points. So with that being said, home evaluations. This thing is super cool. Thank you for everyone who's actually utilized this service. If you want to know what your home is valued at in today's market, go ahead and put your property address in, click it in, you get an instantaneous email, you get a little video from me thanking you for using the service, and then by all means, ask your questions, right? Sometimes this thing's off by a little bit. If you have a recent upgrade or a renovation that you're just curious about, maybe you have a mortgage renewal that you want to prepare yourself with, you want to pull some equity, reinvest that money, or you're just looking at what your interest rate could be for your renewal, go ahead and reach out. I've got a lot of connections here in Calgary and more than happy to point you in the right direction if needed. So here's the microeconomic breakdown. This is one of the most important slides of this entire video, only about 15 minutes in. So let's actually move this down here. We can see it's a little bit fuzzy here. Couple of things to note, right? Look at Northwest, saw a $20,000 increase month over month, almost 3% in this quadrant. They only had a 55% sales to new listing ratio. The months of supply is under 2 months, and they're still seeing massive increases. So again, we're looking at the total residential, it's flatline. You look at homes in Northwest Calgary, they're seeing some massive increases in this quadrant, right? You can see some reds here, northeast, north, and east all saw slight decreases, as well as south and city center seeing increases for their price point. Moving it down to apartments, right? Again, look at some of these decreases. West and south. South saw a $7,100 decrease. They only had a 50% sales to new listing ratio, and they're upwards of 3 months of supply. West, similar story, only 43% sales to new listing ratio. So for you sellers out there who want to sell their apartments in West or South, make sure that you're looking at the comparables in your area and listing it at a more competitive price than what you think you might need to list it at. If they're only selling 40 or 50% of the listings, you want to make sure that you're sticking out more than those others, right? If you have equity to play with, that's perfect, but we need to create that plan. You can still see City Center and Northeast saw some slight increases, right? Even though they had 30 and 40% sales and new listing ratios, they're still seeing some slight increases. Semi-detached, almost $7,000 decrease from last month, $11,000 decrease in West, right? We've got a couple other ones here, like $4,600 decrease in North Calgary. So where am I getting at with all this? With the total residential update, which are very valuable, they're very good to understand, but it's very important to realize that you have to break it down, and this is where the calls come into play. You want to know more information? Book the damn call. Let's have a conversation, and we can go through this all together, right? We are starting to inch down, right? We're going down to that 0%. Are we going to dip down to the negatives for a little bit? There's a possibility. Really depends on some of this political action going on. The Alberta economy is still very strong. Our tariffs on Alberta oil are lower than some of the other tariffs, unfortunately, that the other provinces are seeing. So we might get by a little bit better than some other provinces will, but it's still important that we stay updated on that, and I might actually record some videos on that in the coming months. So with that being said, where are we going to lie, right? You can see here, we kind of hit our peak like mentioned last year, and are we going to dip down or are we going to increase? We're still projected to increase by 3% according to the Calgary Real Estate Board forecast, but there's just a lot of uncertainty in the month of February where we just don't know how that's going to actually unfold. So make sure to subscribe. I will be uploading my single family apartments, townhouse, and semi-detached videos in the next week. So if you have any questions, reach out, but we'll see you on the next one. Peace.